Hey everybody, Boris. Welcome to the commodity dollar section for May 22nd to May 26, 2017. Odd dollar, dollar CAD, and Kiwi dollar. Should be a very, very quiet week as far as event risk goes, with the exception of CAD, which has the Bank of Canada announcement coming up on Wednesday. That could be the only big mover. And in fact, that was really the big mover this week as it got a big boost from oil. There's been a slight, definitely clear, but definitely a small rebound in Aussie dollar and Kiwi dollar. Those are, I think, as much a function of relatively decent data out of the Asia Pac, as well as just anti-dollar flows, but not in any meaningful way. The commodity dollars continue to lag the majors in any response to the dollar. There's still the low volatility trade. There's still sort of the Johnny-come-latelys, the second-hand trade as far as the numbers go, and it looks like the support resistance numbers are still going to be very much within 100 point of each other for this week as well. So we're looking at 75 to the upside maximum in the Aussie, with 73.50 still pretty decent support. CAD is the only one that has the wider range, the better potential for more extension, and actually really sort of at this point kind of a move, a pretty decent move even away below the 35 level, as momentum is very much with CAD on all the trades. And Kiwi dollar inching slowly but surely towards the 70. The data has been relatively good. The dairy auction was good again this week. We don't have much on the calendar. If you look at the calendar this week, there's just almost nothing here. We have the Bell talking twice, although it's highly doubtful he'll say anything material in both cases. They've sort of just been on a straight up neutral position, and that's where they remain. Situation in Australia is steady as she goes. There really isn't any points of serious pain nor any great potential for growth that you see out of it. Canada has been the much more volatile story because obviously of a whole bunch of issues, because of oil coming down, because of the NAFTA friction, because of all sorts of things that they're almost extraneous in some ways to the organic Canadian economy. But overall, the data remains not horrid. We do have wholesale sales that should be an interesting look, although retail sales were okay. As a matter of fact, let me just go back to retail sales and I'll show you. So retail sales were a little bit better. They bounced back up, and that should give the wholesale sales numbers relatively good numbers. Construction work done. The one thing that's been weak in Australia has been finally, it looks like the housing bubble is starting to really let some air out. So this could be an interesting look here in Australia, just to see if construction is starting to roll over significantly, and whether that's going to have any material impact on the economy. And then, of course, the BOC rate statement. No, not much change expected, but it'll be interesting if they'll address any of the issues as far as oil, NAFTA, need for any further easing. They were a lot more dovish before, and that really changed the dynamic. But now, perhaps they may assume a more neutral stance, which will be bullish Canadian dollar as we go forward. And that's pretty much it. Annual budget release out of New Zealand. Not much going on. As far as the charts go, let's take a look at the charts here, and we'll start with the Aussie. And actually, let's start. This is the weekly chart, right? The weekly chart gives me, I think, a little bit of a better look here. So again, look at the low volatility. You're talking about a weekly candle of, I don't even know. Last week was what? The high was 74.69. The low was 73.89. So we're not even 100-point volatility candle on the weeklies. So it really provides very, very little potential trade here. It does look like there was a serious bottom here at 73.50, and there's potential here for us to go to 75, which is really where the trade tops out. It's kind of the only other thing that you see here on a longer term basis is a double bottom with a higher low coming up here is mildly bullish. It's sort of suggestive that the Aussie has clearly has a strong bid in this 72-73 area, and that the fact that if this is indeed a higher low, there's a potential here for a second rally back up there as a 76 handle. This really would be a function of low U.S. rates and the market getting more disappointment with the dollar than anything else that I can see as far as the Aussie goes. Kiwi, same kind of story, trading a little bit better. Kiwi found definitely a hardcore bid at the 68.50. Remember, even post RBNZ, they could not break the 68 to the downside, and 4 weeks now we've tested that bottom, and it's tested relatively well. So 70 looks like to be the next area to be tested on those anti-dollar flows. And really the big story the true story in the commodity land is the dollar CAD. This is a very powerful reversal candle here on the weeklies. Does suggest that we could test the 35s. It really suggests that we could go all the way down to perhaps even 33. Clearly a topping out formation. This 38 held 3 weeks in a row. And now if oil prices, as you can see, above the 50, can just hold that bid for a little bit longer with OPEC maybe in Russia threatening to further restrain production, all of that definitely bullish to the caddy, and that trade produces a move hopefully down to 33.50. That's the strongest commodity trade as we go into the week. That's how the week shapes up. Wish you guys the best luck, the best trading. Boris, over and out.